Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
And you should be seeing our charts. The last alert I see was an Aussie CAD. Let's go back to Aussie CAD. And that is right down here. And you can see right now, as we scale out, we have 3 red zones, 1 green zone. It's in an uptrend. We do have an up arrow. But if you look closely enough, you can see that that up arrow is already bounced off of that red zone. And it's looks like it's bounced. We could possibly get a down arrow, which may qualify this for a contra trend trade. Right now, the trend is up. And I'm going to put an up arrow in.
No, it's actually, I think isn't it down?
It is. Oh, you're right. Oh, thank you. Charles. See, I haven't had my coffee this morning.
It's early.
It's early. I just got my coffee.
You gotta keep your eyes on him, Charles. I'm telling you.
Keep me, please.
He goes rogue all the time.
Eyes and ears.
All right, we are in a downtrend, so we're going to make this one a little bit. We're going to make that arrow a little bit bigger here so we can see it.
Yeah, your logic was good. It's just that it won't be a counter trend. It'll be the correct trend here if it breaks the other way.
Why is it so early in the morning? I was up late last night helping people get themselves set up, and it was a little bit. The alarm did go off a little bit early this morning. So watch me at all times, at all costs. Okay, I'm just going to make this arrow a little bit bigger. So we've got a arrow. Go to my object list. Go to the edit. And then I'm just going to make this the line thicker, which basically makes the arrow a little bit thicker. That's a little too thick. Let me go down about here. And you'll see that that arrow now is, actually could use a little bit bigger, more size here. Seems unusually small today.
Yes. It is usually larger when you hit that bottom segment from the bottom.
I wonder if that was, interesting. Okay, well, anyway, we are in a downtrend. If we get an arrow, it could be a bounce arrow. We could possibly get a go on this one. It has crossed the moving average now. We did get the bounce. If we get an arrow, it looks like we would have enough room to the downside. If it were to close somewhere around here to the downside, that's only 14 pips to the zone, so that's still too close. So it still would not be a trade there. Even with the contra trend trade, it would still be beyond the outside the acceptable limits. Now, part of the strategy and we talked a little bit Friday that we may be talking about some of the other strategies that we have. There was one that was the contra trend strategy, and you would draw a vertical line. For if you live in the East Coast, it'd be 8 o'clock on the East Coast. So our chart times my chart time is basically 7 hours behind. So I would have to add 7 hours to 8 o'clock. So that'd be 1500 bar. So if I look at and see where 1500 right there, that's going to be the 7 o'clock bar. And I'll do another one 2 hours later. So basically from 8 to 10 is the reversal time. So it'd be 15 to 1700 hours if you're used to a 24-hour clock. So if we get a contra trend trade inside these two vertical lines, we're able to we could take a trade based on the bounce arrow go rules. So we'll just keep those handy and just note those as we go along here. There was an Aussie New Zealand trade. This was at 12 o'clock, so that'd be 7 hours ago. And that'd be about 5 o'clock this morning. And we'll take a look at that.
7 hours ahead of 12.
They're 7 hours ahead of 7 hours behind 12. Well, let's see, that's 12 o'clock on the. Right now the time is.
Yeah, I need my coffee.
Yeah, I think I need my coffee again too.
7:30.
So right now the time is on the chart time is 14:30. So 2 hours ago. So basically at 12:15 on the chart, I believe that's chart time. 12:15, we had an alert on the Aussie New Zealand. Let's take a look at that one.
My apologies.
Let's see if there's an arrow there. Aussie New Zealand. Right there is the, and that was at 12:15. That looks about. That was a buy. Okay, my chart says 12. The alert says 12 o'clock, and my chart says it'd be at 14. So that's a 2 hour difference on that with the chart. But this, where these alerts are, there's a 2 hour difference. Regardless, it's right up into the red zone. We have more red candles than green candles. Scale in, so we are in a downtrend, and we were right up into the. So we're looking at a downtrend. This is an up arrow in the downtrend. We do not take this trade. I'll scale back out, or scale in, and we will go ahead and put an arrow in that. Down arrow. Let's see. Our trend is a down, so we're going to make that. Wonder why it got so small this weekend.
What's the matter?
Well, the arrows just seem to be very, very small compared to what they were. Maybe it's just me.
Well, your candles are a lot smaller too. Maybe if you zoom in a little bit.
Well,
no, you've got little candles.
Yeah, I just don't think that's the case.
Weird.
Maybe when they fix yours, maybe they'll fix my arrows.
I at least have my money zones back.
Well, that's good.
So that's
one
start.
Thing. That's a start. Okay, so what we'll do, I think what we're going to do here is we're just going to go ahead and see if there's any arrows that are kind of. There's a Canadian, I can see an arrow right there on the CAD yen. Let me just take a look at that one. Again, you can see that these are in some pretty tight zones. And that may hold true for at least a little bit of while till the, obviously there wasn't a lot of movement in the London session for the CAD. Let's look at some of the British pairs and see if that has anything to, shows us anything. Let me move this out of the way. And let's look at the British Aussie. And we did have an up arrow. Let's see what the zone trend on this one is. We'll zoom out rather. We are in an uptrend. And so while we're waiting around for the next alert, we can just go ahead and start getting our charts set up a little bit. So we're in an uptrend on this one. So we're going to go ahead and put an arrow there. Uptrend. Our zones, we can check out, make sure our zones our arrows are, our lines are somewhat close by so that we can adjust those. I'm going to go to my chart, go to the target or the open trade area. So we're looking at right now, the price is about 179.60. So I'm just going to edit this, go 1.7960. And I'm going to just get my ranges going for my targets. So it'll be 179.20. I'm just trying to get my lines close to where the price is. And my target will be 1.79, call it 80. That chart's all ready to go for the next alert. Actually, I'm going to move this arrow up since we have a green line right up here. I'll just move that on up, get that close by, and we'll take a look and see where And I don't think we're going to have the range. Now with this one, we may have had the 20 pips. I don't know. Let's see. If we had this arrow down here, it was an up arrow, uptrend, and 22 pips. If you were awake to take this trade, you could have taken this one and got your 20 pips out of that one. But right now, we have to wait for the pullback, wait for it to pull back enough, give us another arrow, up arrow. If we can get another arrow close by where we are on this one, we can just barely get 20 pips out of that. So if this generates an up arrow, we could possibly get another trade out of this. I'll put my target up there where the possibility would be. Then we can just measure that out. Put that up there, and then we're going to put this down below. And see where these different ranges are. Next trade, next chart. We'll go to the British CAD. I like the British this time of day because we're still in the London session. And so you're just going to go through your charts right now while we're waiting around for the next alert. And we are in an uptrend. There's the last green zone. And we'll put our objects on. Open trade, put that pretty close to where the price is right now at 175.40, we'll call it. And target, we'll put that 20 pips away, 79.60. And we'll put our stop in 1.7900. Then where'd they go? $75, that's at 1.75. There we go. And that one's done. So no trade there yet. Move on to the next one, the Swiss. Take a peek at that one. And this looks like we're in an uptrend. We're going to zoom out. No red zones at all. Let's go out a little bit, and we're going to put the arrows in. As I just do, this is something you have to do. That's just one of my techniques I do. I like putting the arrows near where the last zone was, because that way when the zone goes away, if it gets traded through it and it goes away, then I know I have an arrow sitting right there knowing that there was a zone there at one point in time, which gives me a little bit of a heads up if there's going to be a direction change.
Excuse me, Al?
Yes.
Matt needs to be brought over, please.
Oh, he's okay.
Didn't allow him to this morning.
Let me see. Let me go and see if I can get him in there. Thanks for letting me know that he's here.
Of course.
Let's see, where is Matt? There he is. And there we go. The gang's all here. And
yeah, sorry. Good morning, guys.
Good morning.
Good morning, Matt.
Object list.
Morning, Matt.
122. We're going to call it 122. So we're going to open trades with 1.22. And target. We're in an uptrend, so 1.240, I think would be it. Oh, 220, 224. 2240, we'll call it. And we'll have a stop for, I'll call it 1.1980. Nope, that's not right. 1.2180. That's 1.2180. There we go. And now that one's somewhat set for when the if there's an alert comes through. So remember we mentioned about the at 1500 and 1700 is what the reversal area is for if we do a contra trend trade. This would be the area we'd want to be taking that in. The rules are we don't take it before or after it. But if you get a reversal inside this yellow zone, you could take that trade as a contra trend trade. We'll see what happens there. All right now the alerts are coming in pretty slow this morning. We'll see if we get something in another couple minutes. And let's see, let's go to the British yen. That's a pretty popular one sometimes. Zoom out. We are in an uptrend. Get our arrow. Zoom in.
Well, it looks pretty good, Al.
Well, this wasn't an alert. Right now, what we're doing.
Have an alert. Yeah. Okay,
we're just going through the charts, getting the charts set up for when we do get an alert that would be kind of ready to go.
Mm-hmm.
Trying to get a little feel for which way the market's going. Trying to get our direction kind of set up so we have a pretty good idea, so we can kind of go right into the trade if we see it that looks like we get a nice alert for it.
For sure.
Again, this is the zone that we're looking for. This is the money zone between 8 o'clock East Coast and 10 o'clock. That's the time. It was often called the 10 o'clock reversal. Was often touted as. And basically what happens is this is just the pre-market before the U.S. market opens up. And sometimes you'll get some, and we've seen it over and over again in the, when we were doing the AIRIS wedges, you'd see that at 9 o'clock, you'd see a nice big move just before 9 o'clock. And a lot of times between 9 and 10, it would reverse itself. So we're just going to keep a note of that, just to have that handy so we can be ready for it if it comes. And let's see, let's go to the New Zealand. And again, we have, this was a nice little trade. This is the beginning of the money zone. Looks like this is in an uptrend, it looks like. Let's see. Yep, that's in an uptrend. Scale in, we have 1, 2, 3, 4, 5 green zones, 2 red zones. More strength to the upside. We'll zoom out. Or zoom in, I guess is the term. Arrow. And we have up arrow. So we're in uptrend, so we're going to do an up arrow. Put it by the last zone. And we're going to move this over to the 1500 hour time frame. And we're going to make another one at 1700. And we're going to be ready to see if something happens. We know the direction. You can see even like this, you have two arrows right here in that. And we could just measure that and see if that would have been a trade if you're up at this time. This one, I think, certainly would have worked. In the money zone direction, that's 40 pips. This one's in the money zone direction. We're looking for 20 pips. The upside, that's 28 pips. So there would have been enough room if you had those arrows. If you were here when those arrows were generated, you're in an uptrend, up arrow. You actually came down, formed a zone, bounced, arrow, go. And so that would have been a nice little trade there. Again, this is all during the London session that we're looking at right here. Anybody have any questions, comments, anything they'd like to see, talk about while we're waiting around for a trade?
Hey, Al, that last chart you just had open there that you were just talking about, can you go back to that for 1 second?
Sure can.
This is a question was given to me, and I actually, in looking at it, I'm not positive I know the right answer. Okay. So you talk about bounce arrow go with that chart.
Yeah.
You see, there's an obvious bounce right there.
Right here.
Yeah, and then you have an up arrow, but then you have a down arrow, and it never gets back to the support level down there. So the next up arrow there, does that qualify as a valid trade because it never hits support again after that down arrow?
You're talking about this arrow right here, if that would qualify?
Well, I don't know that it would. So obviously there was a bounce prior to the previous up and down arrows, but because there was that down arrow right there, does that, once you have a down arrow, do you need to see a bounce off of a zone again for the next up arrow to qualify as a valid, bounce?
No. And basically what's interesting with this one, because this is a kind of an interesting one, you actually have a nice zone down here where we had a nice big move down, came up, and this bounce right here is what created this zone. You see, even like this one right now, it came back down. It really, and actually never really did bounce off of this one, but this arrow, this red candle created this zone. Now, this green zone wasn't here, so it really wasn't. It was more of a bounce off of this one, but even though it didn't really even get down to this one, it never really bounced. But then it created another zone. So now it's starting to create some support underneath it. But the biggest thing is that you're in the direction. Now let's see where the direction was. Let's scale out of this a little bit. This might be an interesting one to take a look, to dissect a little bit.
And just to summarize, so even if you have an opposite arrow, that doesn't force the rules to need another bounce. Like it's okay to have an opposite arrow in that trend and still be able to say that prior to that opposite arrow, if it bounced, you're okay to get into a trade, right?
Correct. I mean, this was the biggest thing about looking at this is, I mean, we keep saying bounce arrow go, which is all very true. But the reality of it is that we had let me scale in here a little bit. The reality is we had a zone, it formed another zone. So we determined that we are in an uptrend because we had a lot of green. When you scaled out, we had a lot of green. This was a viable trade because we have a up arrow, and our stop had been way below. And if you measure for that first up arrow, you have 20 pips. That qualifies for the trade. Also, so you would qualify. Let me scale in here a little bit so we can see this a little better. This arrow right here this zone was created, so we actually had this was the entry off of this up arrow. You have green zones below. You have 40. You have lots of room. You have lots of rebar, so to speak. You have a big wall below you, and you have 20 pips. If you have 20 pips or more, you can take that trade. You wouldn't be taking this one because it's in the wrong direction. You had an uptrend. You wouldn't be taking this one, and this trade right here that you took it, you're well within. You're not even close to your 40 pip target stop. So you got in on the open of this candle where the down arrow is. You still have, if you got into that trade, the down arrow wasn't there. You still have 40 pips to the downside. So you still have lots of room. And it never came close to hitting your stop. You actually have two levels on a level right here, which gives you even more security that you're going to be okay. I mean, your stop right now, it could take this whole green zone out and you still only be at 30 pips. So
Al, there's James has a couple questions that he put in there.
Okay.
In the chat there, if you just want to take a quick look at them.
Let me see what they are here.
Because myself, I'm kind of leaning a little bit that you need a bounce, but if you get a down arrow, then you kind of need a bounce for it to be a bag entry specifically.
Yeah, I mean, before this call, I would not have taken that arrow down below
you would have taken
not that one, the next up arrow. Yeah, I wouldn't take that one because of that downward arrow prior. I would have been waiting for another bounce.
Mm-hmm.
But I understand your logic, Al. Just as far as general rules, I don't know if Nate would say once you have a downward arrow, you need to see another bounce off of a support area.
Yeah. I guess that would be something maybe to get some qualification with.
Yeah, you know what? Let's take that away, and I'll we'll get an answer to be 110% sure. I do believe it's still a completely valid trade from price action perspective and everything. You know, you got a nice solid trend line there. So
Yeah, and actually, what you're looking at too is if you look at this, is where it kind of comes with some of the other
nice
technicals.
wedge too.
You have a wedge here, so I'll be looking at this little candle right here, where this is an origin. If you what you do is you try and connect the wicks. I would connect the wick here, so you have an anchor, a hit, and now we have another hit right. Pretty well, not quite. Let's see, it's. Let me see if I can snap this in here. See where this would. This, yeah. Well, I probably still go with this one. So here would be an anchor. This is the origin of this move. The other thing is this is the Sunday open. There was a huge gap right here, and so gapped up. This one actually came back down and filled the gap. We have a nice little anchor, a hit, and here's the second hit. So this actually is a nice little bounce off of this trend line.
Right.
And also, so two things I like about this is one, I don't think that bounce was all that far off. Let me just see how many pips that was from the bottom of this candle. Is it within a spread's worth? So there's basically you're looking at still 7 pips. It's still pretty soon. That's still let's see, down to this one. That's 13 pips. Okay. I mean, it obviously did not bounce off of this zone. I do like the fact this one kind of, even this one didn't bounce off of this green zone because it never really got down that low, which means there was some upward pressure at this point. Again, this one didn't bounce off of the zone because there was some upward pressure. So the fact it didn't actually get into the zone, I still would have been okay with this one. Mainly because I have 2 zones below. My stop would still be on the other side of it, and I still have the 20 pips to the upside. And also now you have it bouncing off the trend line. So here's the anchor, here's a hit, here's a near hit, here's another hit, and you can see that it's respecting this trend line all the way up. Now, once it gets up here, that's going to be a whole different story, whether or not it's going to reverse or not. But now we're starting to get into this, and this is where you start seeing where it's getting into that reversal zone, where if it comes up here and bounces and comes back down, if you have 20, I would say if you had 20 pips to this trend line, I would be willing to probably take that, or if you have 20 pips to the next green zone, which is all the way down here, and that's 67 pips to the trend line. We've got 44 pips. So if we did get a bounce off of this into between these 2 yellow vertical lines, that would be a contra trend trade because the trend is in the upside, but you're also getting some nice little bounces, and it's basically trending to the upside with this being somewhat support.
We have a couple of alerts, Al.
Oh, good. Finally.
We got QUS and Aussie CAD.
CAD. Let's take a look at that. We looked at Aussie CAD earlier.
Okay.
Might get a nice entry here, guys.
Which one there, Matt? Aussie CAD. Anything here? Let's see.
I don't know.
Let's see. We have.
Okay,
Let me look and see what direction we have. Aussie CAD.
I was doing the crypto thing this morning, so.
I'm looking at the Aussie CAD. We have a downtrend. Here's our down arrow. And we have a bounce. There's an arrow. Do we have 20 pips? Let's see. We have 20 pips. We are in a downtrend. And let's measure that out. We have, here's the entry. This would be the entry right here. It's going a little bit opposite of the direction we want, which is actually good. And we have 12 pips to the downside, so that's too close. No trade there. Now, if it came back up enough to get 20 pips, if it can go up and let's see, there's 20 pips, right? So we could get an entry right around the, I'll call it the 197.72 area. So let's go mark that object. Open trade, so it'd be 197.72.9772. Let's see where that comes in, and right about there. If we can get this thing to come up and still kind of stay within the region here, we may be okay to take this on a pullback. But right now, the arrow does not give us enough room to the downside. So you can't take it on the open, and you have the bounce. It's still kind of trending up. I still probably would hesitate taking that. I'd like to see it get a little bit deeper into this reversal area before I would take that. Right now, it's still not quite in that range right now. I'd like to see it come up. And if it comes up, retest this zone and give us another down arrow, then we should have enough room to take that trade.
While you're on your objects list, I don't know if you would like to move over the arrow that's within your resistance zone.
Oh, this one here.
Yeah.
Let's see if I can grab this.
It's just to know if that'd be helpful to you later.
Yeah, it's kind of hard to see it there, isn't it? Move it out. So we're in this area right here. And the other one was a New Zealand USD. Let's take a look at that.
Yeah.
New Zealand USD. And we're going to zoom out, see what our trend is. Looks like we are in a downtrend. It's a down arrow, downtrend. Let's do it in here, see what we can find for a range. And we're going to go from the open. Kind of like seeing these little green tabs there so you know where the actual close was. And that's only 12 pips again. Again, there's not enough room to the downside. Don't pass on that trade. While I'm here, I might as well go ahead and put my objects in. Then we're going to open this is the open trade. So basically right now the price is about, we'll call it 0.7170. So 0.7170. And I'll move my targets in a downtrend. So 0.7150 for target. That's where the target would be. And the stop, we'll be looking at 0.717210. 0.7210. That's our 40 pip stop. That's the stop would be up there. So we're on a downtrend. We want to only take shorts. We have a down arrow, but we don't have enough room. And let's move our vertical lines over. So I'll change my vertical line to 1500. Did that work? May have been the wrong date. That's what the problem is. So here goes 02, 0201, 0201 with 1500. Let's see if that does it. There we go. And we'll put another one, another vertical line 2 hours later, and that'd be a 17. Again, this is just a zone that a reversal pattern would be acceptable for a reversal of the trend, for a contra trend trade. But we are in a downtrend. Just trying to keep this as routine and as concise as possible. Remember now, if a contra trend on this one, it's in a downtrend. So if it bounces off, the trend is down. So if we get a bounce off of this zone, come back up with an arrow, we can take that contra trend into this zone. What else do we have here?
We have a wedge alert that came in at 7:45.
Is that an IRIS wedge alert?
Yeah.
What's the pair on that one?
It's Kiwi US.
Let's take a look at it. Let's see if we can draw a wedge on some of this. Kiwi US.
Just to change up the flow while we're waiting another.
Yeah. We're still gonna be, we actually had a discussion with corporate yesterday, and we're going to be still continuing doing some of the technical analysis. We're going to try and keep it as simple and concise as possible for those of you who want to learn more about the technical and price action analysis of trades. So, but we'll keep doing some aspect of that as we continue on with our journey and with these alerts. So we have the new, that's a wedge. Let's see. Let me draw this thing out on another chart here.
Yeah, it's not a bad wedge, huh?
Is it? Okay.
Yeah. Yeah, it's got actually pretty big.
Kiwi US. What was the ascending or descending?
Descending.
Descending.
Yeah. Top to bottom of my stick is like 63 pips.
Ooh, pretty good size.
It's big.
Kiwi US here. Let me see here. Let me get this.
I got 3 tags on the bottom trend line, and I got 3 nice ones on the top. So
Let's take a look at this. Kiwi US. And what was the time frame? What was the time of the wedge?
7:45.
7:45. So what we're going to do is we're going to start with our 15-minute chart. I like starting with a 15-minute chart. Spread it out. 7:45. So we're going to get a vertical line at 7:45. That's where my lines go. What happened to my start? Oh, here they are. 7:45. So I'm going to be looking. What I do is I draw a yellow line at 7:45.
On my 15-minute chart for this, there was an arrow that's still valid. Bounce arrow goes. It's the second downward arrow.
New Zealand. Let's take a look at that. Maybe we have a trade there. New Zealand, U.S. Second arrow. This one just popped in here.
Yeah.
This is what we just did, but we found out that it was too close. It was too close. Yeah. This is the green line would be the 20 pips. It's already inside the green zone. Now you could maybe get a few pips out of it, but I'm going to hold off. This fact we have a couple of hits into this, and it would have to go all the way deep into there in order to get the 20 pips.
If it does that, it's going to breach my bottom trend line. Right now, it's bouncing to the pip off the trend line, and I don't.
Actually, this is really good. This is really a good one to analyze because it is so close to the zone. Let's take a look and see where the. Let's take a look and see. The arrow was at. Let's see. That would have been the price would have been right about in there. So that's
71.50 is the green zone, right?
I've got 71.68 would have been the entry. So let's take a look at this one. Let's put this one under the microscope. So 71.68. So we're going to mark a line at 71.68. 71.68, which would be right in here. And that's about where that arrow was. So let's take a look. The arrow was at 15. One candle over. We're going to widen this out and make this thing look a little bit bigger. So here's where the arrow was on this chart. So we have the down arrow. And we were looking for 20 pips. So our target would have been at 71.68, so 71.48. This would have been the target. And what I don't like is that 48 is right here. The target's below this pivot point, which means that this pivot point would have to get going. We have to go through this pivot, which is where this strong move came up. And this is one reason why to get 20 pips out of this would be pretty tough because of this little zone right here. Now we can measure this. You can see like from the close of this is actually a doji right there. From the close of that to where the entry was, you'd be looking at basically 12 pips. Now, if you wanted to risk the 12 pips, you would go for 12 pips on that. That would be a viable target. You said it was a descending wedge, Matt?
Yeah, it was.
Okay, so we're going to, so descending, that means it's going from high to low. I would start my trend line here. I come down to the low here, come back up. Come back up.
Mine a little bit bigger. But...
And I'm going to flatline it here. And this is all subjective. I'm also going to note that this is the here's Sunday's open. This is where the open came on Sunday. This is the overnight range. So I'm going to draw a box around this range. And I'm going to my mid-range. So I got my so this is what I call the playground that it's playing in. So if it breaks the bottom of the wedge, then we'd be looking at this would be my first target right around in this area, because this is where the wick is. So I would be concerned about this area right in here. This is where the playground is, there to here. That's where the wick was. And we're going to spread that out, and they call this demand. And then we're going to take a look and see. I don't see any wicks up above on the top part. So that's basically, I see this little wick. Here's a doji from this is Friday's. As it was turning Friday, here's a little wick, here's a little pivot light, here's a doji. So I'm going to come over here to look and see where that supply zone is. And you can see the overnight session. We went from here to, let's call this I'm just going to take this little doji, and this is going to be supply. Just remember that it's all a matter of supply and demand. Just like if you go to the store, if you have a lot of supply, they're going to start dropping the prices. If they have a lot of demand, they're going to start raising the prices. But here's a nice little trend right here. You can actually see where we have from the overnight high, we have an anchor. Here's a hit. If I take it to a hit here and take this out like that, you can see that here's your trend. Here's an anchor. Here's a hit. Now, if it comes back up, the next hit would be right about where these moving averages would be lying, or it's going to break down to the downside. I don't like the fact it's to the downside because it's getting so close to where our demand zone is. But if it were to break the bottom of this wedge and come back down and get a bounce, that would give me a nice reason to maybe take it to at least to the upper part of this wedge. In that case, we'd have, if it came down into this zone someplace and bounced, we could get our 20 pips we could get our 20 pips to the upside of where this downward edge is. So right now, I see no trade right now. It's inside the wedge. It has too few pips till it gets down to the next demand zone. And I would not want to take this risk. Now, if it breaks this trend line, and it would be basically forming another, I'd like to say another strong little pullback. Right now it's pulled back, but it hasn't really confirmed anything. This was a little bit of a confirmation, but it broke. This is kind of a little bit of a head fake. So right now it's just trading inside this range. No real clear direction, other than the fact I'd be more apt to take it long down here and take it short up there. And if you can see where the price is right now, if we do a Fibonacci retracement on this, and keep an eye on the alerts if we have any alerts coming in. If we do a Fibonacci retracement, so from there, that'd be 0 to 100. And right now at the B, it retraced basically 61.8%. I'd be looking at more of a bounce off of here, continuing this trend, and then looking at the zero line up here for the target. Or basically up around the 8 for the target, but have to break through here and have to come all the way up to take out the pivot here and the pivot here.
Excuse me, Al.
Yes.
We got 3 new alerts just now.
Okay, let's go take a look at them.
Cool.
We got the pound yen, Aussie CAD, and pound CAD.
Okay, so we have a.
So I can look at the top of the pound Aussie if you like.
Yeah, I'll take pound CAD. I'll go check that out.
Okay, you're gonna take pound yen, Matt. And what's the other one?
There's Aussie CAD and there's pound Aussie. Which one do you want to look at? I'll take the other.
I'll take Aussie CAD.
Okay, I'll do the pound Aussie.
All right, pound yen.
Why did I not get those? Oh, pound. Oh, I did get them. Okay, Aussie CAD. So, all right, we're in a downtrend because we already figured that one out. We have an up arrow right up into the zone. We are coming up into this this would be a contra trend trade because we're inside our yellow lines, but we're right up here into our zone. So we don't have enough room. Now, if it were to break this, then we could maybe possibly look for another area. I'm going to zoom into a different time frame. I'll go to the 30-minute and see if I can find a red zone beyond this, and that'd be all the way up here. So if it can break through this red zone, we could possibly have a nice little trade to the upside. But that would be a contra trend trade inside this area heading up towards that. That'd be a pretty
Pound Aussie is a no trade.
Yeah,
Okay.
there's no trade for the pound yen because you're going right into, so to sell trade idea, you're going right into a green zone. So you don't want to be selling right into a green zone with a strong uptrend. So no go there, guys.
Okay, so I'll just take a look at this one here so I can see what you're talking about here, Matt. And there's a pound yen green zone uptrend getting inside the reversal zone. Now, here again, this would be a possibility from a contra trend standpoint. Again, contra trend is not going to be as high a probability as your uptrend, as your trade with the trend. But just keep in mind, this is the area where you could get a reversal if it takes this zone out. Let me move this over here a little bit. This would be the reversal area. Now, if it breaks through this green zone, do we have 20 pips to the next zone? Let's take a look and see if that would work from a contra trend standpoint. There again, it's only 18 pips. Again, that'd be tight. I would probably pass on it. And what was the other one? Pound Aussie CAD. We did that one.
I think we looked at them all. There are three.
We looked at them all. Okay.
Yeah.
All right.
Yeah.
And we can take a little closer look at this pound yen if we like. Go to my trading view chart. Right now, this is still a no trade. It's still inside the wedge. We got some resistance up above. We have a short distance to below. We'll just pass on that one. Pound yen, we'll take a look at that one. And it looks to me like we are in a, we said we were in an uptrend on this one, pound yen.
Yeah.
We're in an uptrend. Yep. Okay, so we're going to take a look at this. Pound yen, we're in an uptrend. So first thing I'm going to do is I'm going to look and see what the overnight range is. So here's the Sunday's open. And so I'm going to draw a box around the high and low of the overnight. Whoops. I'll change the color of this so we can see a little bit better. This is my range area. I'm going to snap the top of this. I'm going to snap the bottom of this one over to, made a little bit of a lower, just barely a little bit lower high right there. I'm on a 15-minute chart. And we said we were in an uptrend. So we can see that here's our 30-minute moving average. If it's got to get through, we have a 30 and 50. This is a little bit of a zone where you're probably going to have a little bit of a battle going on in here. We are in a uptrend. Here's a pivot low. This was Friday's. Here's a nice little pivot on Friday. We had like a little, almost like a double bottom on Friday. Took off, nice big move out. Came back, retraced, spent the weekend, opened up Sunday, went back up again. So here's our new trend line. I like to take it from the low to the, now we don't know where this thing's going to end up, but right now I'm looking for a pivot, a significant bounce off of something to where it bounces and then heads back up again. So if I can get a bounce off of here, and then we must go somewhere in that direction like that, and we'll see if it would be enough to maybe get us into something here. But right now, this is too close to the bottom. We've got a trend line coming up. We can even extend this from the This was Friday's low. This to the overnight low. So here's an anchor. Here's a hit. Right now it's testing this right now, but with this test, with this bouncing off of here, we also have, this is a strong bounce point right here, this 30-minute 62 moving average. That's a strong bounce point. If it breaks that, it still has to get through the overnight low. We measure that out. Here's the low. If we met to here, that's basically we have, see, that's basically 18 pips, I guess. It'd be 18 pips. 43.61 to 43. Yeah, it'd be about 18 pips to the. It would have to break in order to get a strong move down. It would have to break this point right here, and then it's going to have to get through this area. So what I would do is I would draw a box from there to there, and I would expect if it does break this wedge here, it would have to get. We'd probably get a bounce, maybe a break here. This could be a little bit of a head fake where it would go up to the upside, because remember, we are still in an uptrend on this. Yes, we have to be real careful with these contra trend trades. This is the overall direction. How do you read this one, Matt?
Sorry, I had myself muted. I was talking. Yeah, I'm not touching that at all. I'm not gonna be deviating from. I haven't taken enough counter trend trades to be able to speak to them, to be honest.
So anyway, this is the technical analysis of why we didn't want to take that other trade. It's just another way of confirming the direction and where we're going with these trades. So let's see, anything else? Any other questions?
Actually, you've got a question from Jeff in the Q&A. He's asking, how do you make your trading view charts look like that?
Indicators on the videos on is there a video on that? I don't think I have a video. There's a couple different ways we've basically there's no real secret to these. Basically, I have 3 moving averages. Actually 4. There's actually 4 moving averages. They're all exponential moving averages, and the fastest one is a 5-period exponential. I make that one green. The next one is a 13-period exponential. I make that one yellow. And then I have the 15 exponential moving average, which is the orange one. And then the blue one is a 30-minute exponential moving average. Now, keep in mind that what I do, the way I do it is I have the 62s are my main bounce points. I want to see these things bounce off of the 62s. So if I'm on a 15-minute chart, my 62 is orange. If I'm on a 5-minute chart, my 62 is purple. And if I'm on a 1-minute chart, my 62 is white. And I just have it's a tool that we have that just allows, as I change time frames, for instance, like if I go to my 1-minute chart and I change it to a 5-minute, you'll see it automatically turns purple. So if I look and see a purple line, I'll make note that that's a 5-minute 62. And this one's actually, we had a nice little break right here. We'll see, watch and see what happens when it bounces off this 30-minute 62 period. We'll see. I'm going to guess it's going to hit that and it's going to bounce right off of that. Found a point. Now this is a nice little break right here. Let's see how much room there was on this. So from here to, well, it went right through that. It's got some downward pressure. Even though it looks real big, it's really only 10 pips right there from where it broke. You've got 10 pips to this. You see how it's forming a wick right now? Oops, there we go. It came down. This is where you can really get yourself into trouble on these 1 minute. I still on 5 minutes. Rather, let me put it back to 1 minute. One thing about TradingView is what's nice about TradingView. Whatever I draw on the 15-minute chart will propagate itself all the way over to the other time frames automatically. So if I want to see where my 15-minute 62 period is, then I can come over here to the. I can draw it right here where it is, and it will. You can see where it propagates it right over here and here. That's one nice things about TradingView. It's really easy. It's a real easy charting system once you get to learn it. You see how this thing came down? It bounced on a 5 minute. It bounced, went through it. This is a little bit of a head fake. You have to be careful with that. You can see where it came back down. Now how much, and it also tells you how much time you have left on the before the candle closes. Like right here, which so before this, we have 1 minute and 41 seconds before this 15-minute candle closes.
First, if you can repeat your EMAs, Al.
Oh, I already answered them.
Oh, you did? Okay.
Yeah. Yeah, I sent it to them directly. Look at the 30-minute, eh? It likes to hold that price.
Yeah, it likes to hold the price, and that's why I was kind of expecting. I mean, and we did get it did penetrate the trend line. Now the question is it going to come back up? Now it penetrated. If this 15-minute candle closes and comes back up and retests the trend line without going deep into the wedge, that could be your trade to come back down to where you could maybe get your. This will still be your target, your first target area right here. So if it came back up, and you would have 35 pips to the target. So this would be a viable trade, contra trend trade. Remember, we said that at between 7 o'clock and 10 o'clock East Coast time. Let's put those times in right here. So here's 8 o'clock East Coast to 10 o'clock. So right now, this is in the zone where we have the contra trend trade. Remember, we're in an uptrend. Here's our 7 o'clock. So this would be a viable trade to take if you had the room, right? But the problem is we didn't have the room for it. There's no reason to be taking iffy trades because there's enough good trades in the course of a week where you don't have to be taking trades that don't fit the criteria.
I hear a couple of alerts come through.
Let me move aside here. Euro Swiss.
Euro Swiss, pound CAD, pound Aussie.
I'll take Euro Swiss, and we have Euro Swiss is.
Yeah, I'll do the Aussie. So
looks like we're in an uptrend. I'm going to zoom out. More green than red, so we are in an uptrend. Arrow up. So we're in an uptrend. Mark that. We have an up arrow. That's a good thing. But you can see that the up arrow closed right at where the red zone is. So there's not enough room to the upside there. So that's a no trade. You can see that again. You can see that it hit the money zone, but it's been ranging in a relatively narrow range. Let's see what the range is. You see anything there, Eva?
The pound CAD is actually a counter trend trade.
Oh.
So
let's take a look at that.
It's not a trade. It's not following the rule.
Okay.
And it's actually in a support zone, and it was a sell alert. So
yeah. So you said pound Aussie, eh? So I got pound Aussie. Looks like it might be viable.
Okay, let's take a look.
Or maybe. Let me just check real quick.
We're in an uptrend.
We're right into a zone.
We're uptrend right into a zone. So there again.
Oh, good.
And this is not.
Like
this
you're
is not.
sitting in the bottom of the ocean there, Matt. Today, what's up?
I don't have my headset.
Oh, okay.
Yeah, it's upstairs, and I don't want to wake up the kids.
I don't blame you for that.
Yeah, they were up really early this morning.
And then again, this is really typical for a Monday morning where you have big moves a lot of times at the open. On Sunday night, you have some big moves at the open, but then as the like as the London session opens, things start getting, they go, oftentimes they go just in a little bit more of a range than what makes it viable. It has a strong move down, it has to go back up. You have a range. Now that's a 57 pip range, which is not a bad range to go. So what we're going to be looking for, we're going to be looking for a bounce arrow go to the upside. If it breaks, it would be a contra trend trade, and we could actually come to the downside. So I'm going to put those. This one could actually be an interesting scenario as this thing progresses. We're going to put this at the 15. So we are in the contra trend zone. 15 to 17. There's only like a 2-hour window here. But what this really is, this is the pre-market before the U.S. market opens up, is where these contra trend trades are. London opened up, drove it up, came back. So right now it's getting ready for the pre-market for the U.S. session. We could get a nice little break to the downside, then possible another bounce to be with the trend. Once it gets out of the zone with these yellow vertical lines, once it gets out of that zone, now you're back to trading with the trend only again. But it has to get through this area because right now we have a little bit of a testing of the waters here. We actually have a double bottom. Here's a pivot. Here is a nice little pullback. And right now it's retesting this bottom before it's either going to break through and retest this area, or it's going to bounce off of this and then retest this area. We can put this one under the microscope. This is the British Aussie. So while we're waiting for that, let me go and set the charts up on here so I can see what I'm doing. It's the British Aussie. And we did say we were in an uptrend. And this is the same type of scenario where we were talking about bouncing off that 30-minute exponential 60. Like, again, these moving averages are all exponential moving averages. There's a 5, a 13, a 15, and a 6. This is a 50-minute 62, and this is a 62 overlaid. This is a 30-minute 62 moving average. I just have that overlaid on all the charts as a 30-minute. So this is, if I go to a 30-minute chart, you'd find out that it would be the same point. And you can see it's coming down, it's bouncing off of that. We do have this was Friday's range. I like looking at seeing what the range was from the day before. And you can see where this was Friday. And the high of Friday was right over here. This was Friday's high. And I like to see where the wicks are. As I increase this, and I can see that if I look at now this is on a 15-minute chart, but if I see where the highest close of a candle on a 15-minute chart is, which is right here, I'll just draw another little zone from here. You can take that over, mark where the wick is, because that's as high as it came. And you can see that the overnight, Sunday, it came right back up, and it came right back in and retested this. Pulled back up, went back up again. So this is kind of a significant area where from Friday's area high to where, and I'm going to do the same thing down below here for the lows of Friday. Just catch the wicks. And I know that this is where the buyers came in. This is where the sellers came in. The sellers just got taken out. So really this area right here is only looking at that as being, actually I'll probably extend it a little bit more because right now this is the range. This is sort of like the wedge. What I see right now is I see this area right in here. There was a wedge. Let me draw that. I should use my little wedge tool here. So here's a high, here's a low, here's a lower high, and we have a flat bottom. So this bottom right here, this one's holding. It's holding. You can see where it hasn't come back down, and now you see it has a higher low, a higher low. But I see where it broke Sunday. It came up and broke Friday's high, made a new high, came back down into this area, came back out again. So right now, if I look and I'm seeing that this is the area, this is the range from Friday that it's now trading in. And we actually have a wedge here. If you look and see where here's the high, here's the low, here's a lower high, and here's a higher low. And you see that the price right now is trading inside of this region. Has a bounce. We have the bottom of the box here. It tested it here. Here's a hit. Here's a near hit. Now the question is it going to be able to break the bottom? This is a little bit of a, now we're in the contra trend zone. We are in an uptrend. We have an up arrow. It did break the bottom of this trend line here. Here's the anchor. Here's the hit. Here's the hit. Penetrated. This candle, the first red candle, could not close. It came back down, tested, and closed above it. This one now has a little bit more momentum. We still have another almost 6 minutes before this candle closes. But now if I go to my 5-minute chart, everything's already drawn. I drew it on my 15. Now I can see what it looks like on my 5-minute. And I can look and see that this 5-minute candle, it wicked down, couldn't close. The next 5-minute candle is wicking down. Now this one has 30 seconds before this candle closes. Look on my 1-minute chart. It closed, it went right back up again. But right now you can see it's got a little bit of strength to the downside. I'd like to see this thing come back up, retest the bottom of this, and then come back down. But you still have to get through this area right here. This is where you get head faked a lot because you have a nice little pivot area right here. It breaks the trend line, but it can't break the pivot. Once it breaks that pivot, then you might have a shot down to this area. And then you can measure measure the distance between the bottom of the wedge to here. And there you've got 30 pips. So if it can come up, give us a confirmation to the downside, it would have to get through this part. You could take a shot at it, but the problem would be you still have to get through this. And I don't like that. Because we are in an uptrend. It's an uptrend. This is a counter trend in the counter trend zone, but the uptrend is also such that it has, as it gets deeper and deeper, this uptrend is going to take more into play. So I would still stay away from this one. This one, could it work out? Absolutely, it could, but it's not a real high probability.
So Al, there's in the Q&A, another Charles is asking, can you explain the yellow bands and how they work? I guess.
Of my trading view chart?
I'm assuming it's your yellow lines that are.
These the vertical lines you're talking about? Is that what we're talking?
Is that what you're talking about, Charles? Can you please let us know which ones you're talking about in the Q&A?
These are just basically, these horizontal lines really don't mean anything yet because,
yeah, well, actually, what he's talking about. Sorry. Yeah.
What was he talking about?
It's the ones you're showing on your chart right now. That's okay. What he's talking about.
Yeah. So right now, the way I have my chart set up, the blue line is always going to be where the entry of the arrow would be. If you generate an arrow, I usually put the blue line, which is where the horizontal line which would be the entry price. My green is normally going to be my target, which is going to be 20 pips away. So that would be, so in this case, it's 79.42. So I can go 20 pips. It'll be 79.22. So I can right click. I just like just typing it in. This makes it a lot easier. Here's my target. And I put 1.7922. That would be my target. But see, it's got to get through this zone. If it gets through this, we got lots of room to the downside. So I would be, but like I said, we're in an uptrend. So we're in an uptrend, but we're in the contra trend zone with these two yellow lines. If I do take this, if it can break through this green zone right here, and I can get then I can justify taking the trade to this zone. It's still a contra trend. It still has to stay between these, within this 2 hour period. It has to stay within that 2 hour period. And you're more likely going to see a bounce right around about another 15 minutes is when the 9 o'clock move comes in. So from 9 o'clock to 10 o'clock, it would have to make its 20 pips within that time to cover that contra trend trade. But right now, this is a contra trend, so the trend is up. We have a down arrow. No trade unless you're going to do that contra trend strategy, in which case you have to take it between these two with a down arrow, no zone. Once the zone goes away, then you can use the target down below. So the target here would be all the way down, say 20 pips below where it is right now. And I would put it right about at 7,900, which is an even number, which would be another bounce point that I would expect it to be. That would probably be the target. And you also see we have another little trend. You can see from this move up, it came up, rally, it pulled back. This is a significant pullback, but the price left this area. This green area is where we would have had this is kind of where we have this is where this uptrend began. It actually began way down here. This confirmed it. I would put a trend line from, let me go mark this off here. I would be putting a trend line from this area to here. And you can see it broke. That would be one hit. I'd be looking at this area. And now this one broke. And actually, what I like best is I'd like trying to where I get 3 distinct hits from wherever. So here's a nice little pivot. Here's a higher low. Here is a higher low. I want to see if I can adjust my trend line to where I can capture as many of the hits, as many as I can, then use it, then find, that helps me find my anchor sometimes. When you have these really strong moves, then you can see that I kind of like this for the anchor. This is a good reference area right here.
We have another alert, Al,
Okay, we'll take a look at that one.
on the pound kiwi.
The pound kiwi. And so here's an anchor, here's a hit. Here was a hit. This is where it's breaking, but it's breaking right up into the zone here. Pound kiwi.
Yeah, it doesn't look good.
Pound kiwi. Here we go. Take a look at this. And we are, let's see, we'll zoom out. See where our trend is. We're in an uptrend. Here's my up arrow. So that's still valid. Whoops. Let me just take this off here. We are in an uptrend.
It's already in the zone too. It's already in the.
It's already in the zone. So that immediately eliminates it no matter what direction you're going in. Whether you're going contra trend or with the trend, if it's in the zone, it already eliminates it. So that's no trade. We are in an uptrend. We have a down arrow contra trend in the contra trend zone, but we're hitting the zone here. Scale out. Look at that under bigger picture. Here's a zone. Here's a zone. I like when we have two zones like this and we have a pivot here, a higher pivot. I like connecting these two and then moving on, letting the trend line go. So if I go from the pivot low here to the other zone where the pivot low for that is, probably going to be right around in this area. And here's another pivot. So right here's our trend line. We had the break, but again, it broke right down and everybody came back and tested it. Now this thing could, again, these things could keep on going because but there's no trade because you have too many zones still below. Plus it's contra trend. Move this back over to the 1700 time frame. And this is where a lot of times if you have signals and you say, this is why the rules are there. I mean, that's why a lot of times as you go through your trading journey, you'll see trade setups and you'll take the trade, but not all trades work, and they usually don't work for a reason. And it's oftentimes the contra trend trade works during this time period, and you make it may just go and break through all this and keep on going all the way down to here. But the rule says that if you have zones here, you have to be careful. You like to see where it's all kind of clear sailing. You don't have to go through a lot of these barriers in order to get to your target. The less resistance you have between you and your target, the more likely the trade's going to work out. And this is just showing you where some of those bounce points could be, where you're going to run into some problems for a bounce. This thing could come down, it broke, and it still could come back up and retest, take this out. It could even take this out, come back up and retest, and then there's your target down here. By that time, you actually might have a trend reversal. Because right now you have 1, 2, 3, 4, 5 green, 2 red. If it takes out these two, now you have 2 and 3. It'll still be an uptrend, but the uptrend, this would be, it would still be contra trend until it gets past this yellow line. So in the next, say next half hour, if it can break through all this and come back and retest, you still might, then you might have an opportunity to take it down to here. Here's our zone. See where 20 pips are. See, that's 75 pips. So even if it breaks through here, you still have 55 pips till you get to your target. And see, this is the British New Zealand. British New Zealand. Take a look at that one here.
Yeah, that one's.
The way you have to be careful too is like when you start getting some of these more exotic cross pairs, your spread's going to be a little bit higher. Like right now, I'm looking at the British New Zealand pair, as opposed to being like a normal 1.5 pip spread. I'm looking at 3.5 to 4 pip spread on this one. So you're going to have to get through a lot more to be able just to get to break even. You have to kind of keep an eye on that thing. Check out the spread up here. And right now we're at 69 to 71, almost 72. So you have about a 3, depending on your broker, you could have a little bit, your spread could be a little bit excessive. I don't like trading anything that has more than a 2 pip spread. Euro Swiss, we haven't talked about that one yet.
Euro Swiss. Did
We have an
Euro
uptrend.
Swiss?
Okay. This is one that we have uptrend. Make sure we're on a 15-minute chart. If it breaks through, I'm not seeing any room to the upside, anything on the upside. So let's go to a 30-minute and see if we can find a zone up above. There's a zone right here. So we're going to mark that. I'm going to take this as I'm going to mark this here. Go back to my 15-minute chart. Now you can see that this zone that we're in right now, it's in a zone. Here's the target. But if you look to that higher time frame, you can see that the zone is the top of this zone is right here. The top on a 30-minute chart, the top of it is right on that one. So we go back to our 15-minute and take a look and see where So it would have to get through. You could possibly get a little bit of a bounce right here before you ever got to a target area. So that sort of lets you know where the price on the back to the left of your chart that you're not able to see. It gives you a little bit of an idea of what you're looking at. If it breaks through this, if we gets rid of this red zone, there you're still in the 30-minute zone at 4 pips. You have to go another 4 pips. That's pretty much your spread right there. And up to the top, that's 9 pips. So you have a zone sitting right here that if you break this, you're only going to have 9 pips the upside there. Again, it could be a problem trying to get more than trying to get that 20 pips out of it. You always want to know where your target's going to be. Where are you going to expect the next bounce? And as we look at the Euro Swiss, let me go and put that one on my trading view chart. And I'm going to go to a 50-minute chart. And I'm going to, so right now we don't, as I look to the left, I don't know where the high of this is going to be. So I'm going to go to a higher time frame. I'm going to go to a 1 hour. And I'm going to look and see where my price is right now, which is right here. That's the high, that's today's high right now. And I'm going to scoot on over here until I can find, actually, let me do it this way. Here's the high right here. And I'm going to come all the way over here and see where did the price. So this area right here is what we're looking at. It's got to get through this wick. Once it can break through, what I like doing is I like taking my ray and I go to where I have a wick. And when as I keep going to the next chart till I can get past the wicks and run into a body, which is a wall. So right here, this is the top. Once the price, and you can see where it came down and it got into this zone, came back down, retested it, couldn't reach it. Here's where this downward trend started. So if I take this downward trend from this point here, and I draw a trend line, so here's an anchor, here's a hit, here's a breach, but you can see where it almost continues the trend line. It sort of forms a little bit of a channel. And I come over. Now here it was retested it. Still didn't get all the way up here. Came back down into the channel. And now it's coming up to retest this area. But right now we know that this is where this big move started. This was the origin of this big down move. There's still probably some sellers up here in this area willing to drive it back down again. If it can get through this area, then the next target would be up around this point right here.
Al, just a 5-minute warning.
Okay. Oh, thank you.
You're welcome.
We're just about done with our session here this morning. Didn't really see any trades to take this morning, but that's not unusual for Monday. There's probably a reason why a lot of times Dante's session is Tuesday, Wednesday, Thursday, because that's where Monday is usually, everybody's getting themselves situated for the week, taking positions, and then Tuesday, Wednesday, Thursday are usually your better trading days. And you can see why. There's a lot of times, Sunday night seems to be, there's usually a lot of activity on Sunday because that's when the markets are opening up. And the positions are starting to be the investment firms are getting their positions for the week starting Sunday, especially over in Asia. And then it just sort of flattens out a little bit. And then Tuesday, Wednesday, Thursday are usually better trading days. So just because you didn't find a trade today doesn't mean that there isn't that there won't be some for the rest of the week. We never did check our Forex Factory for the news. Let's see, February 1st. Not seeing anything here for power till 8 o'clock tonight. There's a red folder here on the US at 8 o'clock tonight. That's not going to affect us much today. For tomorrow, 8:30 tomorrow, we have an Aussie red folder at 8:30, so be careful of that tomorrow morning. We'll have to try to remember that. And see any other thing that we need to be looking at. That's Tuesday. Let's see what we have for Wednesday. Wednesday, a couple of red folders on Wednesday for New Zealand at 2 o'clock in the morning. Most of us will be sleeping by then. That's Wednesday, Thursday. Let's take a look at Thursday. The 4th, lots, be careful of Thursday. Lots of red folders on Thursday, 5 o'clock. We have a lot of British, a lot of British, a lot of British. And keep in mind that this Friday is going to be non-farm payroll Friday, first Friday of every month. And that's usually at 8:30. Non-farm, that's 6:30 p.m. That's p.m. Friday, February 5th. First Friday of the month should be non-farm payroll. Oh, Thursday was it? Yeah, Friday. I'm not seeing it. That one moves the market a lot. So with that, we're going to wrap it up today. Keep your powder dry. Don't be too big of a hurry to take a trade. Hopefully you learned something today. Tell your friends, and we're more than happy to keep on diving into these trades. Well, if the trades don't look like a good setup, we'll take a look and see why it's a good setup. Or if we take the trade, we'll look and see what we can expect throughout the history of the trade. I like watching, if we get a trade, I like watching where the bounce points could be. So when you see it hit those points, you don't get scared out of the trade and say, oh, it's going against me right away, because you've expected where it's going to bounce. So, yes. Any other questions before we go? Comments?
Alice just says check your calendar time. Yeah, she wants to
calendar time. Check my calendar time.
Yeah, she just wanted to make sure.
Well, let's see.
Spam?
Yeah, that may be. Something didn't look right with the non-farm payroll. Some of this. No, I'm about to go and check that, make sure everything's synced. See, time should be in New York time. GMT +5 is where I should be. Actually, GMT -5. Let's see here. It's looking better. Let's see. Where is New York? East Coast US. There we go. Save settings. See if that helps. That could cause a lot of problems. Thanks for bringing that to my attention. That looks better. Anyway, thank you so much for coming in. Hopefully you'll learn something, and we will see everybody tomorrow. Have a great day.
All right, everybody, have a good one.